Greetings and welcome back everyone. If you like these videos, be sure to share them with your friends to help the channel grow. I'm CryptoSnake, back again to bring you some Bitcoin analysis. I'm going to start this video out on the daily to analyze the Ichimoku system, as there has been a very important development. And what that development is that the Kijinsen has started to ascend on the daily. This would be the first ascension of the daily Kijinsen since all the way back in November 9th. Previous to this collapse, we've been continually going down, and then eventually plateauing, going down some more, and plateauing. Now, since plateauing, we have broken up, and the price has continued to respect this Kijinsen. Now, this doesn't absolutely mean that we are going to go up from here. There may be a couple more days of downwards pressure, but I wouldn't be surprised to see the next daily candle post the daily Kijinsen ascending as well. With the Tenkan-sen now descending and the Kijinsen rising, we may move for a potential bullish TK crossover, which would look something like this, for a massive price breakup. Now, this overall does have me leaning potentially bullish from here. I would say I'm more bullish than bearish from this level, as we have come down to the 3750. We held that support. Now we have crashed down once more and held this support again around 3800 or so, forming a lower low. And I'm going to go ahead and cover some other reasons why I believe we are more likely to head up from here than down, even though that there is a lot of bearish sentiment in the market right now. One of those is down on the RSI. We have successfully bounced off the 30 level RSI for now the third time. We are very likely to break up from this position, as we have a lot of room to grow on the daily, and Bitcoin is very oversold. Now, on this massive dip down, we did overextend down through this RSI level previously, so we do know that that is capable of happening once more. But this leaves me cautiously optimistic for a bullish resurgence. Now, as for the SAR on the daily is still moving in a bullish pattern. The price is a little close to this SAR dot, which has me mildly concerned. If I do see this flip, then we are most definitely moving for an extended down period. But as long as this bullish SAR holds, we should be good for a potential move up from here. Now, taking a look at the Copic curve, which is the measurement of the overall trend from bullish to bearish, where it might stop and cease. Back on November 26th, the price leveled out, which marked the bottom of the Copic curve. We have started to resurge here. Normally, we don't establish a bear trend from this momentum until we start to level out on the daily, which would obviously look something similar to this down here, coming up and plateauing before the breakdown. There can be swings within this territory, but this also leads me to be slightly more bullish that we have more room to climb, as this has not started to level out. Now, if this continues to level out, I will give that warning out to my VIPs to exit positions and move down, but for the moment, bias is definitely towards the longing, as we are below the daily Kijinsen. Now, taking a look at the Williams %R, which is a measurement of the bearish and bullish momentum, which continually strikes through on either side. It's very similar to the RSI, or the Relative Strength Index. Gives an indicator of where the momentum might be moving. So on the daily, we broke back up from the bottom, and we've been continually side trending along with the RSI, bouncing from these lower levels, and we still have plenty of room to grow on the Williams %R, indicating that the pressure is very likely to break up from this bearish momentum into the bullish territory. Now, this long-term pump, which may take a couple days, maybe a couple of weeks, depending on how volatile Bitcoin is at the market, will very likely retest the 4250 resistance level. It will likely go up to test this 4500, and if we break through these resistance levels, we will again test the 4750, which is a weaker resistance level, all the way up to potentially somewhere around the 5500 level. It depends on where the momentum moves from here. But first and foremost, to continue with this bullish trend, we really need to break this 4250, which we were rejected from on this previous pump as the price started to settle and accumulate. I believe this price point is an absolutely great entry for the novice investor, and a lot of people will look to scoop this up. Google Trends are also starting to pick up for Bitcoin, and there's been a lot of bullish news in the space. So as I said, I'm cautiously optimistic at the moment that we will get out of this bear trend and start moving in a bullish direction here shortly. Now, one other thing I want to address in this video is the formation patterns that have been spreading around on Twitter and the crypto space in general. Right here we have one of the formations that is being drawn. People are saying this is bearish. This is actually a symmetrical triangle. Now, this price formation normally occurs after breaking down to form a potential pump out of this area. What this would look like is a bounce up, bounce down, and then a break up towards the end of the symmetrical triangle for a massive break up. Here's a picture of that in action. This normally trends down into the symmetrical triangle before continuing up and breaking out to a peak. So this overall is a bullish pattern. Now, the second pattern that we're forming in the short term, and of course shorter term trends don't hold as well as longer term trends, is a descending wedge pattern. Now, a descending wedge is what's known as a bullish continuation pattern. As we broke up into this area, we've been finding resistance up here, support, resistance, support, resistance, breaking up as we accumulate for a final break up. This is also a bullish pattern. And just to see that in action real quick, this is a stock example of a falling wedge with a breakout. Now the fact that we've tested the bottom of this support of this wedge again leads me to believe that this formation is still intact. If we break down below this, that obviously would cancel the formation. And just an FYI to you guys, trend lines are great, but they're not always accurate. So it depends on the bias of the person. I'm particularly biased towards being bullish right now, so I would obviously see these as more accurate than I would a bearish pattern. However, they could go any way. It's really up to the interpretation of the person. So in all honesty, I'm cautiously optimistic for a bullish trend. Now, if you're watching someone who is more bearish, they're going to believe more bearish trend lines. So one more formation that I want to get into real quick. This last formation is the broadening ascending wedge, which would be bearish. There are a lot of ways to draw this, a lot of ways that really invalidate this trend unless you are bearishly biased. This particular peak here technically invalidates it because it would normally be a wedge that would look like this and hold around there. So being this wide starting out makes me less likely to believe that this wedge will play out the way that they think it will, especially with a bullish SAR down here. But just to give an example of how this might work, this would break up, break back down to the lower wedge, trend back up to the upper side of the wedge, which again would potentially be bullish up to a test of 5,000. Even the most bearish pattern right here would go to 5,000, as we're still very, very early in the trend. It's very unusual for a wedge to continue and only test the top once and then the bottom once before breaking back down. Now here's an example of an ascending broadening wedge pattern. You can see that there are multiple strikes of the upper and lower before breaking back down through, normally back to the previous return to the beginning of the wedge pattern before finding more support. So even the most bearish pattern here would eventually break up to here and then break back down somewhere around to the 3,600 level. Now that pattern may very well turn out, and we may break up to 5,000 before coming back down to test this level again, which would cause people to go into a panic, of course. But if we hold this support, I'm definitely super bullish for Bitcoin as we move forwards, especially going into December and January. So these are the three main formations you're probably seeing in the crypto space right now. I'm leaning more bullish, so I do lean towards the first two that I laid out. And I do believe that this broadening wedge is unlikely to play out, as you really have to take some liberties with how you draw these trend lines. Normally you would draw it from the previous peak, which would look more like an ascending triangle. An ascending triangle like this, which I've seen some other YouTubers post, clean that up a little bit, is actually a very, very bullish pattern. This would trend somewhere through this area before breaking up through the upper resistance and breaking back up with some massive force somewhere around to the 5,000 level again. So almost all of these patterns have us breaking up to the 5,000 level. That combined with the rising daily Kijinsen, the lower percent R, the lower RSI level, and the Copic curve are all leading me to believe that we are going to break up to 5,000 at some point. Now, as far as lower time frames, let's go ahead and go down to the 4-hour. When this may occur, when we may actually break out of this, it really depends on if we hold the support of these trend lines or not. Down on the 4-hour, we are oversold on the RSI, and we're now breaking back from bearish pressure into a bullish pressure resurgence. So if we have a TK crossover here, which it does look like this may possibly be forming on the 4-hour, I would expect a price resurgence back to around 39.60. If this Kijinsen starts to ascend on the 4-hour, we're very likely to break through that, flip the SAR to the bullish, and come up somewhere around here, find some resistance, trade sideways as this ascends, and then eventually strike through. This would also coincide with a test of this upper triangle, and we may see another break back down to the lower triangle around this range. Now, just to support this theory again, that there is a potential chance that we will have a resurgence here, on the Copic curve, we have broken down from this peak and are now downtrending. If this starts to level out, we are very, very likely to see it break up. Sometimes this leveling out is flat, sometimes it just breaks immediately back up into the uptrend. So this would be the position to watch short term. Now moving down to the hourly, we are posting bullish SAR dots on the hourly. The Kijinsen has broken up from a previous drop. It also did this previously, so this may still continue down into a breakdown. Down on the Copic curve, we are starting to ascend, so this may form another bullish breakout and break up and start the uptrend back up to the triangle. So all of these indicators are currently reinforcing a pump from this position. It may not be the pump to 5,000, but over the next day or so, we should see some nice volatile movement upwards. Before I get on with the rest of my technical analysis, if you'd like to join my free Telegram for insights on the market, including Bitcoin, altcoins, and a sneak peek to my personal entries and exits, join t.me/cryptosnakepit. Links directly to the chat and a link on how to install Telegram, which is a free chat program I use to communicate with my VIPs, in the description below. I've also launched my official Twitter, so follow me at CryptoSnakeVIP to get regular updates. December is officially here, and I've cleared my gains chart from last month, and this month is starting out strong. Here's a preview of last month's gains. I also give out hot altcoin swing positions every week to my VIPs. If you want information on how to get into the VIP group to be part of these trades, the information is also in the description below. And I'm always happy to answer questions. If you have any questions, feel free to message me on Telegram at officialcryptosnake, and I'll get to it right away. Now, just to recap what I've covered so far. As I am cautiously optimistic, I do believe we are going to test around 5,000. However, there is always the bearish perspective that we will break down to 1,800. This would result in a bearish SAR flip on the daily and a massive plunge. This is a very dangerous area to trade in, as we are halfway through a potential bear flag down. If we break from this and fully capitulate down to 1,800, I will take advantage of those trades on the way down. However, for the moment, I am definitely leaning more bullish than bearish. I would say about 70% likeliness that we break up to 5,000 from this range, and about 30% or so that we break down. It's still in the realm of possibility, and we're not out of that danger zone, not until we start clearing some of these previous resistance areas and potentially break out of this ascending triangle. As for the market cap today, we're sitting at 126 billion, and we had the normal Monday dump where we lost about $10 billion out of the market and saw a massive plunge. My VIPs took advantage of that and made about 60% gains on that drop. And once again, it did cause the altcoin market to bleed pretty heavily. A lot of positions are down about 5 to 10%. Bitcoin dominance is sitting still around the 53.7% zone that we've been stuck in now for months. But I want to get into some really interesting news stories today. I can really only cover a little bit of it because I want to keep this video short. But these stories are very interesting to think about. They're over on CoinDesk right now. The US government is interested in tracking privacy coins or privacy tokens that these new documents are showing. The Department of Homeland Security is basically looking at Zcash or Monero, which are very popular privacy tokens. They've also been known to garner very nice price movements upwards. However, if you are heavily invested in these tokens, you may want to consider tethering these assets or moving them into something else. This looming threat has always been there that the government will try to go after these privacy tokens, and it looks like there is actual official documentation that they may go after these. This is why I don't tell my VIPs ever to really invest in these privacy tokens. I do like the way that they function to keep your transactions anonymous. It's very good for the space to have this anonymity. However, with the government and the US government especially going after them, there is a potential that the floor could drop out beneath those coins and they may just plummet and absolutely destroy your savings. So that's just a warning I'm giving out to everyone else. Another story here again is that the G20 leaders pledged crypto asset regulations after Buenos Aires meeting. Now, I'm sure you all know how I feel about regulation. It will make the space more stable, but it also hurts the little guy who wants to get rich in this space. Personally, I would prefer less regulation than people complaining to the SEC, I lost all my money because I gambled. But it happens, and the government steps in to try to protect these people from themselves. And that's how we get regulations in the market, and we start getting more ETF trading bots, and eventually human traders do get squeezed out of that market, similar to the stock market. The document that the G20 released said that they will start regulating crypto with FATF standards to counter anti-money laundering or countering the financing of terrorism. This is yet another attack on privacy tokens, of course, which are used pretty heavily to funnel money through anonymously after it's been used or is going to be used for terrorism after being stolen. So it does seem that the world is kind of heating up their attention on these privacy tokens. Another story very similar in the theme is that crypto anarchists are building tools to resist the state in Eastern Europe. There are a lot of laws against the transfer of currency or what you can buy over in Eastern Europe. So these privacy groups are basically opening a discussion and trying to get these tools together to counter these regulations that are coming down the pipe. Asking the question, is this really what Satoshi expected 10 years ago? Citing a lot of these regulations about Wall Street getting into crypto. Crypto in itself was built as an outlier to the financial system. It was designed around privacy. So the fact that all these governments are trying to make it less anonymous kind of goes against the original vision and the original cryptocurrency space or mentality. So it's very interesting to see who will win out in this battle. Personally, I think these regulations are inevitable. I don't think there's going to be any real way for them to stop it, not without absolutely killing the price of cryptocurrency and not using it as a stock market. So that's it for today's technical analysis. If you do make any trades today, I wish you luck. Please join me in my free Telegram at t.me/cryptosnakepit, where I give up-to-the-minute updates on Bitcoin and my personal exits and entries for the private VIP group. Also included is our private VIP chat, where you can chat with many of our experienced savage traders, get personal technical analysis from me, and answer any questions you might have. This is CryptoSnake, signing off.